So someone this weekend made off with $192 million in 2 hours. How does somebody make $192 million in 2 hours? Okay, here's what happened. So I'm sure you watched or heard about the markets having a wild swing this past weekend. What triggered it was Trump announced on Friday new massive tariffs on China, 100% tariffs. And this immediately caused the markets to take a complete nosedive. And then when the White House called China over the weekend to negotiate, China didn't even bother to pick up the phone. So Sunday rolls around, and with the markets taking a total crap and China not even playing ball, Trump pretty much on Sunday had no choice but to reverse course and said, he put this message out on his Truth Social. Don't worry about China. It will all be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it. Okay, so here is how the person made $192 million in 2 hours. Unusual Whales on Twitter is an account that scans the crypto markets for unusually large activity. And it quickly spotted a brand spanking new crypto wallet with no previous activity that made the $192 million. This is what Unusual Whales put out. Breaking, look at this. A new crypto account was opened yesterday morning, 30 minutes before Trump's announcement of 100% tariffs on China. It added a huge multi-million-dollar leveraged Bitcoin short position for YF. The market dumped. The trader made a profit of $192 million in 2 hours. Unusual. So someone suspiciously opened a brand new account just 30 minutes before Trump's tariff announcement and shorted the market with a leveraged position. So let me explain this to you if you're not familiar with what this means. So shorting is borrowing someone else's stock, or in this case, crypto, and telling them you're going to return it back to them. And you're just borrowing it and you're going to return it back to them. And they're like, oh, okay, go ahead. And maybe you'll give them a bit of interest. There'll be some fees on this, okay? So that's why they might be incentivized to do this. So let's say you borrow 3 Bitcoin or 3 shares of stock, and you tell the person you're going to return these 3 stock shares within a set window of time, plus, like I said, some interest or something. You then go to the market and you sell them for the going price. So now, you've got some money in your pocket, but you're going to have to buy back the stocks or the coins because you have to return them at some point, right? You can't just, here's the money. So your hope is, because now you have money in your pocket, your hope is that the value of the stock you just sold that you need to buy back is going to drop. You want it to drop in value. You want it to fail. I mean, this is why it's, kind of a bad karma here. You want it to fail so that when you buy them back, it costs you less money than you made when you sold them. So you sell 3 shares, for example, for let's say $3,000, but the market drops and suddenly they're worth hardly anything and you buy them back for $300. So you return the shares to the person that you borrowed them from, and now you've made $2,700 because they get their stock back. They weren't looking for money. They just want their stock back. You were looking for cash. Now you have $2,700. But shorting is a gamble, or at least it's supposed to be. You're not supposed to know if the market is going to go up or down. You're gambling, right? You're betting. You're even hoping, which, like I said, kind of bad karma to hope for things to go wrong. But nonetheless, it's what people do. But here's the thing. If the market goes up after you sell the shares, you're going to have to buy them back at a higher rate. And now you've lost money. So you sold them for, let's say, that $3,000. And then the market went up. And now you have to buy them back for $10,000. Oh, great. Well, you've lost money. That's supposed to be the gamble when someone chooses to short a market. I mean, they, of course, have some knowledge. They're studying the market. They make some predictions. They might think that a stock is inflated and it's going to go down. And so there's going to be some maybe educated guesses, but it is supposed to be a gamble, not an absolute, I know this is going to happen. And the fact that this person leveraged, meaning they borrowed money in order to buy the borrowed Bitcoin, in order to then place the short on the market 30 minutes before Trump announced a 100% tariff. Okay, looking really suspicious. Now, there are many people who play this game all day long. It's what they do. It's what many of the Wall Street professional traders do. But why this particular wallet is strange and perhaps flagged for insider trading is the fact that it was brand spanking new, and the amount of money they put up for collateral to start the short was about $1 billion. So yes, even though a lot of it was leveraged, this is still a very, very wealthy person or a wealthy group of people. They open a new wallet with $1 billion in collateral. They borrow the Bitcoin. They sold it within 30 minutes just before Trump made the tariff announcement. Then they watched both over the weekend, the traditional and crypto markets just go into an absolute free fall. And then they bought it back up at an extremely low price. And as a result, they made $192 million in only 2 hours. Okay. Well, because of the suspicious timing of this bet and the fact that it was so much money, I mean, could you imagine if you're really gambling, that is a big gamble. And you're gambling it on with borrowed money and that's a gamble. You would almost have to have foreknowledge that something is going to happen to make this gamble worth it. So that is why many are saying this absolutely looks like insider trading and it should be investigated. And if it was insider trading, then that means it was somebody close to Trump who knew he was about to make a tariff announcement against China that would end up throwing the market off of a cliff. Now, that person would also need to be savvy about crypto because this wasn't a traditional short made in the traditional markets. This was done in the crypto market using Bitcoin and Ethereum. So some people have been suspiciously pointing at Trump's sons, Barron Trump in particular, or even perhaps Eric Trump. Now, there's no evidence of this, but people are looking at crypto investors who are sitting around Trump who may have been tipped off. However, other credible sources have come out later now, and they think they've been able to identify the trader as possibly Garrett Ginn, former Bitforex CEO, who publicly denied any political ties at this point. But either way, people are calling for investigation, but because crypto is done using anonymous wallets, it's a little bit harder to trace. It can be done if the SEC opens up an investigation, but I think this episode of what happened this weekend is a massive reminder that unregulated trading leaves ordinary investors exposed while the biggest players pocket the profits. And that's exactly why many people are now looking for regulated ways to get exposure to digital assets without the chaos, the manipulation, or the leverage roulette that we just witnessed this weekend. So this brings me to today's sponsor, House of Doge. Now, one thing we learned from this past weekend, crypto is not going anywhere. For years, critics said it was a fad, a joke, a house of cards waiting to collapse. Well, this weekend, the markets swung hard. And guess what? Crypto didn't break. It bounced right back. That's resilience. That's staying power. The truth is, the world is moving toward crypto. Trump has a crypto czar in the White House, David Sachs. Elon Musk has been one of the loudest crypto supporters on earth. And countries all over the world, including our own, are starting to build crypto reserves. So yes, crypto is here to stay, and it's only getting bigger. But let's be honest, most people don't want to mess with it. Setting up wallets, managing keys, using strange exchanges. You lose a password, you lose your money forever. That's not good. It's confusing, it's risky, and frankly, it's intimidating. And that's why what I'm about to tell you matters. You don't have to buy Dogecoin directly anymore to be part of what's coming. Because House of Doge, the official corporate arm of the Dogecoin Foundation, just went public on NASDAQ under the ticker TBH. Now, that means for the first time ever, you can invest in Dogecoin's future through the regular stock market. No wallets, no crypto exchanges, no 20-word passwords. You just buy it the same way you'd buy Apple, Tesla, or Microsoft. And this isn't Dogecoin the meme. That's ancient history. Dogecoin has grown up. It is now a top 8 cryptocurrency by market value, bigger than most companies trading on NASDAQ. So what is House of Doge actually doing? Well, they're the company turning Dogecoin into something you can use, not just watch. So when you invest in House of Doge through the ticker TBH, you're investing in the corporate arm of the Dogecoin Foundation, the owner of the Dogecoin IP, and the arm driving the innovation and creating the products. It's led by Marco Margiotta, a payments expert who sold his last company for $270 million. And his mission is simple: make Dogecoin work for real life. Buying coffee, sending money, tipping online, even paying at the store. He puts it plainly, Bitcoin became digital gold, great for holding, terrible for spending. Ethereum became a platform for apps, powerful but slow and expensive. Dogecoin was designed for payments, fast, simple, low cost. And that's what House of Doge is building, utility. They're not just sitting on coins like a crypto hoarder. They're forming partnerships with Robinhood and 21 Shares, rolling out real-world tools like the Dogecoin ETP in Europe and a US-based ETF that's expected soon. So regular investors can get exposure through normal brokerage accounts. And here's the part most people miss. This isn't a bunch of tech guys in hoodies. They've got serious backing. Big firms like Pantera Capital and Citadel, and they're using Robinhood's own security platform for custody and trading. Even Elon Musk's lawyer, Alex Spiro, is involved. He chairs CleanCore Solutions, a company listed on the New York Stock Exchange under the ticker ZONE. And CleanCore works directly with House of Doge. It's the official Dogecoin treasury, which means in plain English, they hold and manage the Dogecoin reserves securely, transparently, and professionally. So here's the simple picture. House of Doge, under the ticker TBH, builds the tools, partnerships, and payment systems. CleanCore, under the ticker ZONE on the New York Stock Exchange, manages the treasury and assets. And together, they're the business engine driving Dogecoin's next chapter. Now think about where all of this is going, because Elon Musk calls himself the Doge father. He's building a payment system inside of X, the platform, Twitter was Twitter. I still call it Twitter. I dead name it. Anyway, there's no official announcement yet, but a lot of people believe Dogecoin is going to play a role in X's payment platform. And Elon has been, beyond a massive champion of Dogecoin, so it makes sense and it's even likely. In fact, let's ask Grok. Grok would know, right? Okay, let's ask Grok. How likely is it Elon Musk will integrate Dogecoin into X's payment ecosystem when he finally launches it? And here's Grok's answer. Elon Musk has long been a vocal proponent of Dogecoin, referring to it as the people's crypto and integrating it into Tesla's merchandise payment since 2022. This affinity, combined with X, formerly Twitter, ongoing development of payments ecosystem, makes Dogecoin integration a natural fit for the platform's everything app vision. However, as of October 14th, 2025, X Payments, also called X Money, remains in beta testing with a full launch slated for late 2025. And while crypto transactions are explicitly planned, Dogecoin's inclusion is not yet officially confirmed, though speculation is rampant and evidence points to high likelihood. So there you go. It is clear where this is headed. The future of money includes crypto, and even more specifically, Dogecoin. Looks like it's going to be the everyday Gen Z usage crypto. But here's the key. For regular people who don't want to live in the weeds, setting up wallets, guarding passwords, then TBH and ZONE make it easy to be part of that revolution. Dogecoin itself is the currency. House of Doge, TBH, is the builder, creating the partnerships and the payment systems. CleanCore ZONE is the treasury, holding and managing Dogecoin like a reserve bank. So instead of gambling on exchanges, you can buy TBH or ZONE the same way you buy any other stock. It's safer, it's simpler, it's regulated. And because these are public companies, they file reports, disclose partnerships, and follow real rules. That's what separates this from the chaos we saw this weekend. And right now, when you swipe your credit card, merchants pay huge fees, sometimes 2 to 3%, and they wait days to get paid. Dogecoin transactions, nearly instant with almost no fees. That's what House of Doge is working to roll out worldwide. Faster checkouts, lower costs, and simpler payments. Marco Margiotta said their biggest focus is helping merchants because that's where adoption starts. So if stores save money, they're going to use it. If it's faster, customers are going to love to use it. That's how you go from meme coin to real payment system. And never forget the Dogecoin community. It is one of the biggest, most positive movements in crypto. Their motto is, do only good every day. And they've kept the fun and the heart in the project, even as it moves into mainstream finance. So here's the takeaway. If you believe crypto is the future and you want an easier, safer, more transparent way to be a part of it, then House of Doge, under the ticker TBH, and CleanCore under the ticker ZONE are two tickers that you should know. They let you join the next phase of crypto's growth without touching a single coin. No wallets, no keys, no hacks, just normal investing through normal accounts. This isn't financial advice. It's a look at how crypto is maturing and how the next chapter is being built inside regulated markets. Crypto isn't disappearing. It's just growing up. So tickers to watch. On NASDAQ, TBH, that's House of Doge. New York Stock Exchange zone, that's CleanCore Solutions. And as always, this segment is sponsored by House of Doge.